Men walking away is causing society to collapse. 86% of companies have stopped promoting women to chief executive officer positions. This marks the definitive close of the girl boss era that shaped corporate expectations for more than 2 decades. And it arrives at a moment when businesses everywhere are sharpening their focus on measurable results over symbolic gestures. For years, society watched initiatives aimed at elevating women into top leadership roles gained momentum through structured programs designed to address historical imbalances. Yet recent analyses reveal a swift and widespread pullback that prioritizes long term profitability and operational excellence above all. What this reversal truly signifies for the balance of power in professional environments and how it connects to the growing independence men have embraced across society will become clear as the full scope of these changes takes shape, and staying engaged through every detail will uncover the deeper economic and cultural forces driving this transformation in ways that affect everyone involved. The data showing that 86% of companies have now ceased advancing women into chief executive roles stands as one of the most significant shifts in corporate strategy observed in recent memory. And it reflects a broader realignment where organizations are recalibrating their approaches to leadership selection with an unwavering emphasis on merit and financial outcomes. After decades during which diversity, equity, and inclusion efforts encouraged rapid promotions for women into senior positions, many firms discovered that these decisions sometimes came at the expense of optimal performance metrics and shareholder value. The push for greater female representation in corner offices began with good intentions rooted in the desire to create more balanced workplaces, but over time, it evolved into practices that occasionally overlooked the rigorous demands of guiding large enterprises through volatile markets and competitive pressures. Companies that once highlighted their progress in gender parity statistics are now quietly adjusting policies to ensure that every promotion decision directly supports sustainable growth. And this adjustment has occurred amid mounting economic challenges that leave little room for experimentation. What occurred here traces back to a period when external expectations influenced hiring and advancement far more than internal assessments of capability and results, and the consequences of that approach are now manifesting as firms return to fundamentals that reward proven ability to deliver consistent returns. This development has the potential to influence career trajectories for an entire generation, and it underscores how market forces ultimately dictate priorities, even after years of intentional intervention. The girl boss narrative that once dominated media and professional discourse promised boundless opportunity through sheer determination and visibility. Yet, the underlying reality of business operations has reasserted itself with clarity that few anticipated. As organizations refocus entirely on profitability, the era in which women advanced primarily through targeted initiatives rather than unassisted competitive excellence appears to be drawing to a close. And this transition carries implications that extend well beyond individual boardrooms into the fabric of workforce dynamics nationwide. Men who have long occupied the majority of these high stakes roles are once again positioned to receive the bulk of advancement opportunities because their track records align more closely with the outcomes that sustain enterprises through uncertain times. The reversal did not stem from any single policy announcement, but from cumulative observations across industries where returns on investment in leadership became the sole deciding factor. And this pragmatic shift has accelerated following periods of contraction that exposed vulnerabilities in earlier approaches. Women entering the workforce in the past 2 decades encountered an environment shaped by advocacy that framed their presence in top positions as a moral imperative. Yet the data now indicates that such framing has given way to cold calculations of productivity and risk management. This change effectively resets expectations that had built up over 50 years of progressive reforms, and it places renewed pressure on all professionals to demonstrate value through tangible achievements rather than demographic alignment. The result is a workplace that feels markedly different from the optimistic projections of the early 2001 that rewards resilience and proven leadership in ways that echo earlier industrial models while incorporating modern efficiencies. Observers note that the speed of this adjustment caught many by surprise because the preceding years featured such strong cultural momentum toward inclusive advancement. Yet economic necessities have proven more influential than ideological commitments when survival of the enterprise is at stake. The broader context of this corporate retrenchment reveals how external social movements intersected with business practices in ways that eventually prompted a corrective response. And the timeline of these developments offers insight into the forces that shaped modern professional life. Beginning in the latter half of the 20th century, advocacy for gender equality gained traction through legislative and cultural changes that encouraged women to pursue careers previously dominated by men. And this momentum intensified during the digital age, when visibility amplified success stories of female leaders breaking barriers. Initiatives designed to accelerate representation took hold in human resources departments across sectors, and for a time, they produced visible increases in women holding executive titles, which fueled narratives of inevitable progress toward parity. However, as global markets experienced turbulence and technological disruptions altered job landscapes, companies began scrutinizing every layer of their operations, including how leadership pipelines contributed to overall resilience. The emphasis shifted toward individuals whose experience directly correlated with navigating downturns and scaling operations efficiently. And this scrutiny naturally favored candidates with extensive histories in high pressure environments, regardless of other considerations. What followed was a quiet but decisive pivot away from quota driven promotions toward selections grounded in historical performance data. And this pivot has now reached the highest levels where chief executive decisions carry the greatest weight. The outcome has been a noticeable slowdown in female advancement to corner offices and a corresponding reinforcement of traditional patterns that prioritize results over representation goals. This recalibration arrives alongside other significant changes in how men and women interact with professional and personal spheres, and the interplay between workplace trends and societal behaviors creates a dynamic landscape that continues to evolve. Men who once formed the backbone of corporate structures have increasingly chosen paths of self directed independence that allow them to allocate their time and resources according to personal priorities rather than external expectations. The decision to step back from conventional pursuits did not arise in isolation, but developed gradually as cultural messages emphasized independence and self sufficiency for all, while simultaneously introducing complexities that altered relational dynamics. Over time, many men observed that societal emphasis on certain forms of empowerment coincided with diminished recognition of their traditional contributions. And this perception encouraged a measured withdrawal into simpler, more controllable lifestyles. Public spaces that once served as gathering points for social and professional networking saw declining participation from men who found greater satisfaction in private routines centered on personal well being and financial autonomy. The shift manifested in reduced engagement with environments such as fitness centers, dining establishments, and recreational venues where interactions had previously followed predictable patterns, and instead, men cultivated home based routines that emphasized comfort and efficiency. This movement toward solitude proved liberating for many because it aligned with natural inclinations toward minimalism and focus on essential elements that deliver lasting contentment without unnecessary complications. Economic pressures that intensified during the year 2025 further accelerated these existing trends by prompting widespread consolidation across multiple sectors. And the job losses that resulted disproportionately affected roles that had expanded rapidly under previous diversity focused hiring practices. Many positions created or filled through targeted programs became targets for elimination when organizations sought to streamline operations and restore fiscal health, and the ripple effects extended to individuals who had built careers around those opportunities. Women who had benefited from the earlier expansion now face the challenge of adapting to a more competitive environment where openings favored candidates with established records of delivering returns under tight constraints. The state sponsored support systems that once provided a buffer for independent living encountered their own limitations amid broader fiscal constraints. And this reality prompted renewed examination of long term security strategies. Men, meanwhile, continued to prioritize self preservation by retaining control over their earnings and directing them toward personal stability rather than external obligations. And this approach allowed them to navigate the same economic conditions with greater flexibility. The contrast in outcomes highlighted how different responses to cultural shifts produced divergent experiences when external supports diminished, and the resulting landscape underscored the value of adaptability rooted in individual agency. Throughout these developments, men have demonstrated a capacity to find fulfillment in streamlined existences that eliminate non essential elements and redirect energy toward pursuits that align with intrinsic motivations. The minimalist lifestyle many adopted reflects a deliberate choice to remove distractions and focus on activities that foster genuine satisfaction, such as skill development, physical maintenance, and intellectual exploration, conducted on personal terms. By stepping away from environments where interactions carried heightened scrutiny, men created space for reflection and growth that had previously been overshadowed by competing demands. This period of rediscovery has allowed them to reconnect with core strengths that include problem solving, resilience, and strategic planning applied directly to their own circumstances rather than mediated through external structures. The peace achieved through these choices stands in contrast to earlier phases when societal pressures encouraged constant engagement in roles that often extracted more than they returned. And the adjustment has produced measurable improvements in overall well being for those who embraced it. Women, on the other hand, have increasingly voiced difficulties maintaining previous standards of living as costs rose and support mechanisms strained under economic weight. And these accounts illustrate the challenges of sustaining independence when foundational assumptions about provision shift. The absence of previous patterns of support has highlighted the interdependence that once characterized many arrangements, and the current environment tests the durability of models built on complete self reliance. The cultural narrative that framed traditional male traits as inherently problematic contributed to the conditions that encouraged men to seek alternatives, and the accumulation of such messaging over decades created an atmosphere where withdrawal became a rational response for self protection. Terms that emerged in public discourse to critique everyday behaviors added layers of caution to routine activities, and men responded by limiting their presence in shared spaces where misinterpretation could carry professional or social consequences. Legal frameworks governing family and interpersonal matters also evolved in directions that altered the perceived risks of long-term commitments, and many men adjusted their decisions accordingly to avoid outcomes that appeared unbalanced. High-profile campaigns that spotlighted certain interactions further heightened awareness of potential liabilities and prompted widespread adoption of personal boundaries that reduced spontaneous engagement. Social platforms amplified isolated incidents into broader patterns, which reinforced perceptions of systemic challenges and encouraged men to prioritize verifiable experiences over generalized assurances. In response, men developed sharper pattern recognition skills that guided their choices toward observable realities rather than aspirational ideals, and this discernment proved instrumental in navigating an environment filled with mixed signals. The collective decision to redirect attention inward represented not rejection, but a strategic realignment with self interest that preserved resources and emotional energy for more reliable pursuits. As these patterns solidified, men began to experience tangible benefits from their choices, including greater financial control, improved mental clarity, and freedom to explore interests without external interference. The simplicity of routines built around essential needs allowed for deeper appreciation of personal achievements and the accumulation of small daily satisfactions that compound over time. Relationships that once demanded significant investment of time and resources now appeared less essential when weighed against the stability of solitary living, and this perspective shift enabled men to evaluate options with greater objectivity. Or, the recognition that personal happiness could be cultivated independently marked a profound departure from earlier assumptions about fulfillment requiring partnership, and it opened pathways to contentment that many had not previously considered. Women, meanwhile, encountered the practical limits of models that relied on external validation or support, and the resulting adjustments forced reevaluation of strategies that had seemed sustainable during periods of relative abundance. The economic consolidation of 2025 served as a catalyst that exposed these vulnerabilities and accelerated the divergence in experiences between those who maintained independence and those who had anticipated continued external provisions. Men who had already established self sufficient frameworks found themselves better positioned to weather the changes, while others faced the task of rebuilding from more precarious foundations. The interplay between corporate retrenchment and personal disengagement reveals a society in transition where incentives realign around individual accountability and measurable contributions. Companies that once incorporated social goals into their core strategies are now streamlining to ensure survival, and this focus has direct consequences for career progression across genders. Men who opted out of high visibility social and professional circuits have created parallel economies of self reliance that operate effectively outside traditional structures, and their success challenges assumptions about the necessity of conventional participation. The data on leadership promotions serves as one visible indicator of deeper currents that influence how resources and opportunities flow through the system, and continued observation of these trends will likely yield further insights into the sustainability of various models. As the effects compound, the landscape continues to favor those who adapt quickly to new realities, and the men who embraced minimalism and focus early on appear to be reaping the rewards of foresight and discipline. This ongoing evolution underscores the power of market forces and personal agency to reshape expectations in ways that no single movement could fully anticipate or control. The developments surrounding corporate leadership selections and male withdrawal from conventional roles together paint a picture of a world adjusting to new equilibria where previous balances have been disrupted by a combination of policy, cultural, and economic factors. The emphasis on profit driven decision making has restored a level of pragmatism that had been tempered by other considerations, and the resulting environment tests the resilience of all participants. Men who have found peace in their chosen paths demonstrate that fulfillment can be achieved through internal resources, and this example influences broader conversations about purpose and priority. Hey guys, in a world pushing you to own nothing and be happy, crypto is your key to survival. Join Angry's Crypto Academy to master buying, selling, and trading crypto. Make huge profits and safeguard your wealth. Plus, discover the one crypto virtually no one is talking about, poised to create new millionaires in the upcoming bull run. The link is in the description of the video below. Go check it out now. Women navigating the adjusted professional terrain encounter both challenges and opportunities to prove their capabilities under revised criteria, and the coming years will reveal how these adaptations unfold across industries. The narrative of empowerment that once centered on collective advancement now intersects with individual accountability in ways that demand strategic thinking from everyone involved. As these shifts settle into place, the full impact on societal structures will become more apparent, and the choices made today will define the frameworks that guide future generations through similar transitions. Expanding on the historical foundations that led to the current state provides essential context for understanding why the reversal in corporate promotions feels so pronounced and why men have responded with such deliberate independence. The advocacy movements of the mid 20th century laid groundwork for expanded opportunities by challenging restrictions that limited access to education and employment, and these efforts produced meaningful gains in participation rates across fields. Subsequent decades saw the integration of legal protections and cultural norms that encouraged further progress, and for a time, the trajectory appeared linear and irreversible. However, as implementation moved from access to accelerated advancement through structured programs, the emphasis occasionally shifted toward outcomes that prioritized demographic targets over operational fit, and this created tensions that accumulated over time. Men who experienced these changes in their workplaces and personal lives began to perceive a pattern where their contributions received less acknowledgement while expectations for their support remained constant or increased. The resulting sense of imbalance prompted many to reassess their level of investment in systems that appeared to undervalue their role, and the decision to step back gained momentum as alternatives became more attractive. This process unfolded gradually without coordinated action, but through millions of individual calculations that weighed costs against benefits and ultimately favored self directed paths. The introduction of concepts that scrutinize natural behaviors in public and professional settings added another layer to the evolving dynamic, and men responded by modifying their presence to avoid potential conflict. Campaigns that highlighted specific postures or interactions as problematic created an environment of heightened self awareness, and many chose to limit exposure to situations where such scrutiny could arise. Legal systems that govern family matters and interpersonal disputes also evolved in directions that increased perceived risks for men contemplating long term commitments, and this influenced decisions about relationships and family formation. High profile social movements that raised awareness of certain issues simultaneously generated cautionary tales that circulated widely and encouraged protective strategies among men. Digital platforms facilitated the rapid sharing of experiences, which reinforced existing perceptions and accelerated the trend toward withdrawal from public social spheres. Men learned to trust direct observation and personal experience over generalized social messaging, and this discernment guided them toward lifestyles that minimized external dependencies. The resulting focus on self improvement and financial independence produced outcomes that validated their choices and created positive feedback loops that sustained the movement over time. By the time economic pressures intensified in 2025, many men had already established foundations of self sufficiency that buffered them against the job consolidations affecting other segments of the workforce. The reduction in positions that had expanded under earlier initiatives highlighted the fragility of structures built on non performance based criteria. And the adjustment period tested the adaptability of those who had relied on them. Women facing these changes encountered the reality that previous gains in representation did not guarantee continued security when organizational priorities shifted, and this realization prompted various responses ranging from skill enhancement to strategic career pivots. Men who had embraced minimalist approaches found that their lower overhead and focused resource management allowed them to maintain stability even as broader markets contracted, and this contrast further solidified their commitment to independent living. The state level supports that had supplemented individual efforts also faced constraints during this period, which amplified the importance of personal planning and resilience. The overall effect has been a clearer delineation between those who prepared through self reliance and those who anticipated continued external assistance, and the divergence continues to shape experiences across demographic groups. The cultural emphasis on female self sufficiency that gained prominence in recent decades encouraged many women to build lives independent of traditional partnerships, and for a time, this model appeared viable amid expanding opportunities and supportive policies. However, as economic conditions tightened and corporate environments became more selective, the practical challenges of sustaining such independence became more evident and public expressions of difficulty increased. Men observing these developments from their positions of chosen solitude recognized the limitations of systems that had been presented as complete solutions, and their decision to remain disengaged reflected a commitment to self preservation rather than indifference. The absence of previous engagement patterns left a noticeable gap in social and economic interactions, and this gap has prompted ongoing adjustments on all sides. Companies, meanwhile, continue to refine their leadership selection processes with an eye toward maximizing returns, and the data on promotions serves as a leading indicator of where priorities now lie. The combination of these elements creates a new normal where individual agency and market discipline play larger roles than collective mandates, and the long term consequences of this realignment will unfold over the coming decade in ways that reward adaptability and foresight. As men continue to thrive within their self constructed frameworks of peace and efficiency, the broader society grapples with the implications of reduced participation in traditional structures, and the resulting vacuum influences everything from consumer markets to relationship formation. The minimalist philosophy that guides many of these men allows them to extract maximum satisfaction from limited resources, and this approach stands as a model of sustainable living in uncertain times. Women who once expected continued support through various channels now confront the necessity of developing alternative strategies that align with the current economic and cultural realities, and their success in doing so will determine future trajectories. The corporate world, by focusing exclusively on profit and merit, has signaled that symbolic gestures hold less weight than they once did, and the signal resonates through all levels of professional life. The story of these intersecting trends illustrates how responses to earlier cultural movements have produced outcomes that no one fully predicted. And the ongoing narrative continues to develop with each new data point and personal decision. Men who walked away from the pressures of constant engagement have discovered that solitude brings clarity and strength, and their example challenges previous assumptions about the essential nature of certain social roles. The path forward involves continued observation of these dynamics as they mature, and the insights gained will help all parties navigate the evolving landscape with greater understanding and effectiveness. The emphasis on observable results in both corporate and personal spheres has created an environment where rhetoric gives way to practical outcomes, and this shift favors those who align their actions with verifiable realities rather than aspirational frameworks. Men who recognized the patterns early on position themselves advantageously by focusing on controllable elements of their lives, and the benefits of that positioning have compounded over time. The reduction in female promotions to chief executive roles serves as a concrete example of how organizations respond when external pressures meet internal necessities, and the pattern is likely to persist as long as profitability remains the primary metric. Women adapting to this environment have opportunities to demonstrate excellence through competitive performance, and those who succeed will help define new standards for advancement in the years ahead. The cultural conversation that once centered on rapid transformation now incorporates more measured discussions about sustainability and balance, and this maturation reflects the lessons learned from previous approaches. Men maintaining their commitment to independence contribute to the diversity of lifestyles available in modern society, and their choices enrich the overall range of human experience. The interplay between these elements continues to shape daily life in subtle yet profound ways, and the full story of their impact is still being written through the decisions of millions of individuals responding to the same set of changing conditions. The corporate landscape continues to evolve under the weight of these profit first priorities, and the effects ripple outward into every layer of professional ambition and personal planning. Executives at the highest levels now face unprecedented pressure to deliver immediate and sustained value, which translates directly into leadership selections that favor candidates with documented histories of turning around struggling divisions, increasing market share during downturns, or maintaining operational excellence through supply chain disruptions. The 86% figure that shows most companies halting promotions of women to chief executive positions is not an isolated statistic, but part of a larger pattern where boards and shareholders demand evidence that every dollar invested in leadership will generate measurable returns rather than serve as a public relations asset. This demand has forced a reevaluation of what constitutes effective leadership in the current environment. And the answer increasingly points toward individuals who have already proven their ability to navigate complex global challenges without relying on external mandates for their advancement. Women who aspire to these roles must now compete in an arena where past achievements carry far more weight than future potential framed through diversity lenses, and this competitive reality has sharpened the focus on building irrefutable track records early in careers. Throughout industries ranging from technology to finance to manufacturing, the same story repeats with slight variations in timing and intensity. Firms that once proudly published annual reports highlighting increases in female representation at senior levels have shifted their messaging toward operational efficiency, cost control, and innovation velocity. The language of inclusion remains present in corporate communications, but the actual allocation of resources and promotions tells a different tale. One grounded in data dashboards showing revenue growth, profit margins, and shareholder returns rather than demographic checkboxes. This pragmatic turn has produced a generation of leaders selected almost exclusively on their capacity to execute under constraint. And the men who occupy these positions often bring decades of accumulated experience in high stakes decision making that aligns precisely with current needs. The reversal did not require dramatic announcements or policy overhauls. It simply required the quiet application of consistent criteria that had always existed beneath the surface of earlier diversity initiatives. When economic headwinds strengthened, those criteria rose to the forefront and everything else receded accordingly. Meanwhile, the parallel trend of men stepping away from traditional social and economic engagements has matured into a structured way of life that many now describe as deliberate sovereignty over their own existence. These men have systematically eliminated dependencies that once tied their time, energy, and finances to external expectations, and the freedom gained from this elimination allows them to direct resources toward pursuits that deliver direct personal returns. Physical fitness regimens become non negotiable daily anchors rather than optional activities squeezed between obligations. Financial planning shifts from reactive spending to proactive accumulation with an emphasis on assets that generate passive income or preserve capital during volatility. Intellectual development occurs through self selected reading courses and projects rather than institutionally mandated training programs. The cumulative effect of these choices creates a lifestyle characterized by low stress, high control, and increasing resilience, which stands in stark contrast to the pressures that define many conventional paths. Men who follow this approach report higher levels of daily satisfaction, greater clarity in decision making, and a profound sense of ownership over their futures. The economic consolidation wave of 2025 acted as an accelerator for both corporate retrenchment and personal disengagement. Companies facing margin compression and investor scrutiny eliminated layers of middle management staff positions and specialized roles that had proliferated during the preceding expansionary period. Many of these positions, particularly in human resources, marketing, communications, and certain administrative functions, had seen disproportionate hiring of women under diversity targets, and their removal created visible dislocations for those affected. Unemployment claims in these categories spiked quietly without widespread media attention because the narrative of mass layoffs focused instead on broader tech sector cuts or manufacturing adjustments. The individuals displaced found themselves competing in a job market that had grown significantly more selective, requiring precise skill matches and proven results rather than general aptitude or demographic alignment. For many women who had advanced quickly through structured programs, this shift represented the first serious test of their standalone market value, and the adjustment proved challenging when openings favored candidates with longer tenures in core revenue generating functions. Men who had already reduced their exposure to corporate hierarchies felt these changes far less acutely. Their minimalist financial structures meant lower burn rates, fewer fixed commitments, and greater ability to weather periods of transition. Some maintained part time consulting roles, others shifted entirely into entrepreneurial ventures or skilled trades, while many simply lived off accumulated savings and investments that had been carefully nurtured during years of disciplined restraint. The absence of alimony, child support obligations, or lifestyle inflation tied to partner expectations allowed these men to maintain stability even as broader employment markets contracted. This divergence in outcomes reinforced the wisdom of their earlier choices and encouraged even greater numbers of men to adopt similar strategies. Social media feeds that once featured images of luxury vacations, expensive dining, and status displays now show content centered on home gym setups, personal finance milestones, skill acquisition, and quiet appreciation of simple pleasures. The aesthetic shift reflects a deeper philosophical realignment toward valuing internal peace over external validation. Women confronting these new realities have begun to express their experiences in increasingly candid ways across digital platforms. Videos and posts detailed the struggle to cover rising housing costs, escalating food prices, and unexpected medical expenses without the safety nets that once seemed assured. Some accounts describe the shock of discovering that corporate ladders had fewer rungs available than anticipated, while others highlight the exhaustion of maintaining high performance careers alongside in independent living expenses that continue to climb. These narratives often carry undertones of frustration directed towards systems that promised one outcome but delivered another, and the tone ranges from reflective analysis to direct appeals for solutions. A recurring theme involves the realization that state level provisions, whether through benefits programs or broader economic policies, have limits that become painfully clear during periods of fiscal tightening. When those limits manifest, the search for alternative support structures intensifies. Yet the men who once filled those structures have largely removed themselves from consideration. The resulting vacuum forces creative problem solving, and many women have responded by forming professional networks, launching side businesses, or returning to education to acquire skills that command higher market value in the current environment. This adaptation process reveals both resilience and vulnerability. Women who succeed in pivoting toward high demand technical field sales roles or entrepreneurial ventures demonstrate that capability remains the ultimate currency when structural advantages recede. Those who struggle longer often cite the combination of increased competition, reduced openings, and persistent cost pressures that compound over time. The contrast between these experiences and the relative calm reported by men who embraced independence highlights how divergent life strategies produce dramatically different results when external conditions change abruptly. Men who walked away early built buffers that protect against volatility, while others who remained invested in conventional paths face the full force of contraction without equivalent safeguards. The lesson embedded in these outcomes centers on the importance of aligning personal decisions with observable economic realities rather than prevailing cultural narratives, and those who internalize that lesson earliest have positioned themselves most advantageously. Cultural messaging that once framed masculinity as inherently problematic has lost much of its persuasive power in this new context. Terms designed to critique ordinary male behavior now encounter indifference or quiet dismissal from men who have already opted out of environments where such critiques carry weight. The fear of misinterpretation that once constrained interactions in public spaces has diminished for those who rarely enter those spaces anymore. Legal and financial risks associated with marriage and family formation continue to influence decisions, and many men view long term partnerships as optional rather than essential components of a complete life. This perspective shift has normalized singlehood as a deliberate choice rather than a temporary state, and the growing population of men living this way contributes to broader demographic changes, including delayed family formation, lower birth rates, and altered consumption patterns. Businesses that once targeted dual income households with children now adjust marketing towards single professionals with disposable income and time flexibility, which in turn reinforces the viability of the independent lifestyle. The corporate emphasis on merit based advancement has also begun to influence younger generations entering the workforce. Men starting careers today observe the data on leadership pipelines and recognize that progression will depend almost entirely on individual performance rather than institutional favoritism. This recognition encourages early focus on skill mastery, measurable results, and personal branding built around competence rather than affiliation. Women entering the same workforce face similar incentives, yet they must also contend with lingering perceptions from the prior era that can create skepticism about their advancement potential, unless accompanied by exceptional track records. The net effect is a professional environment that rewards output above all else and punishes reliance on external narratives or protections. Young professionals of both genders who understand this dynamic early tend to thrive, while those who expect continuation of previous patterns encounter steeper learning curves. As these trends solidify, the concept of the girl boss that once symbolized unbridled ambition and inevitable success has faded into a historical footnote. The archetype thrived during a window when corporate incentives aligned with social advocacy and funding flowed toward initiatives that elevated visibility over strict performance metrics. When those incentives reversed, the archetype lost its structural support, and the women who had built identities around it found themselves needing to redefine success on different terms. Some have transitioned successfully into roles that value their specific expertise. Others have embraced entrepreneurship, where they control the criteria for achievement, and a portion continue to advocate for renewed emphasis on representation, even as corporate priorities move in the opposite direction. The diversity of responses reflects the complexity of individual circumstances, yet the overarching direction points towards greater reliance on personal agency and market validation. Men who have chosen the path of walking away continue to refine their approach by eliminating remaining inefficiencies and doubling down on what delivers consistent value. Daily routines emphasize compound habits such as consistent exercise, disciplined nutrition, deliberate financial tracking, and ongoing skill development. These habits create compounding advantages that become more pronounced over years, and the resulting stability allows for experimentation in areas of genuine interest without fear of catastrophic failure. Hobbies that once seemed frivolous now receive serious attention because time has become an abundant resource rather than a scarce commodity. Travel occurs on personal terms, focused on enrichment rather than status. Relationships, when pursued at all, follow strict criteria that prioritize mutual respect, compatibility, and minimal drama. The overall effect is a life designed from first principles rather than inherited expectations, and the satisfaction derived from that design sustains long term commitment to the approach. Economic forecasts suggest that the pressures driving these changes will persist for the foreseeable future. Global competition, automation advancements, and fiscal constraints at governmental levels all point toward continued emphasis on efficiency, productivity, and risk management. Companies that survive and thrive in this environment will continue to select leaders based on their ability to deliver under those conditions, and the data on chief executive promotions will likely remain tilted towards men with extensive operational experience. Women who break through to those roles will do so by building resumes that match or exceed those benchmarks, and their success will serve as proof that capability transcends demographic considerations when criteria remain consistent. The broader workforce will adapt accordingly, with increased focus on lifelong learning, adaptability, and personal financial discipline across all groups. The cultural conversation surrounding gender roles has shifted from demands for inclusion to pragmatic discussions about mutual benefit and individual responsibility. Appeals for men to return to previous patterns of provision and engagement encounter resistance, rooted in hard earned lessons about risk reward and self preservation. Men point to observable patterns of behavior, legal outcomes, and economic incentives that shape their decisions, and they show little inclination to reverse course without fundamental changes in those patterns. Women who recognize this reality increasingly focus on building independent capability rather than waiting for external rescue. And this focus produces a new generation of professionals who navigate the world on their own terms. The resulting society features greater individual autonomy, reduced interdependence, and clearer boundaries around personal responsibility. These developments collectively illustrate how interconnected systems respond when one set of incentives gives way to another. Corporate retrenchment, personal disengagement, economic contraction, and cultural reevaluation all reinforce one another, creating momentum that becomes difficult to reverse. Men who embraced independence early now occupy positions of relative strength, while organizations that prioritize merit now demonstrate superior resilience. The women adapting successfully to the new landscape prove that excellence remains rewarded even when pathways narrow. The full implications of this realignment will continue to unfold over the coming years, shaping everything from family structures to economic policy to cultural norms. What remains constant is the underlying principle that results ultimately determine outcomes, and those who align their actions with that principle position themselves to thrive regardless of shifting external conditions. The story of these changes serves as a reminder that no cultural movement, however powerful, can permanently override market realities or individual self interest when those forces converge. The girl boss era represented a sincere attempt to accelerate progress through intentional intervention, yet the intervention relied on conditions that proved temporary. When those conditions evaporated, the underlying mechanics of competition and survival reasserted themselves with predictable force. Men who withdrew did so not out of malice, but out of rational calculation, and their continued absence reflects the persistence of the conditions that prompted their departure. The current landscape rewards those who adapt fastest and most effectively, and the men living minimalist, independent lives, along with the women building competence in competitive fields, both exemplify that adaptation in action. The future will belong to those who continue to refine their strategies in response to evolving realities rather than those who cling to outdated assumptions about how the world should function. The acceleration of artificial intelligence and automation across entire sectors has introduced another layer of pressure that further explains why companies have grown so uncompromising about leadership selections and why men have doubled down on personal sovereignty in response. Machine learning algorithms now handle tasks that once required teams of analysts, marketers, administrators, and coordinators, many of which were roles filled disproportionately by women during the expansion phase of the prior decade. When these systems prove more accurate faster and far less expensive than human labor, the economic case for retaining those positions collapses almost overnight. Organizations that once maintained large departments dedicated to content creation, customer experience, optimization, data labeling, process documentation, and even certain aspects of human resources oversight have watched those headcounts shrink dramatically as software assumes responsibility. The job losses here rarely make headlines because they occur incrementally through attrition, non renewal of contracts, and quiet restructuring rather than massive publicized layoffs. Yet the aggregate effect has been profound, especially in fields where entry level and mid tier positions served as stepping stones towards senior roles. Women who had built careers expecting steady upward mobility through those pathways now encounter bottlenecks where advancement depends on mastering domains that remain difficult for automation to fully replace, such as strategic negotiation crisis, leadership, cross functional orchestration, and high level stakeholder management under conditions of extreme uncertainty. Men who anticipated these technological shifts years earlier positioned themselves advantageously by focusing on irreplaceable human skills or by exiting corporate structures altogether before the wave hit hardest. Those who remained in the workforce concentrated on niches involving judgment, creativity, physical implementation, or direct revenue impact, where machines serve as tools rather than replacements. The ones who walked away entirely avoided the disruption by maintaining ultra low overhead, diversified income streams, and portable skill sets that allow rapid relocation or pivoting when necessary. Their minimalist frameworks proved remarkably anti fragile during this period because they contained no large fixed costs, no lifestyle debt, and no reliance on continuous corporate employment. When automation eliminated swaths of positions, the men already living independently experienced little material change, while many women who had counted on career continuity faced the dual challenge of replacing lost income and retooling skills in a compressed time frame. This asymmetry has deepened the sense among some women that the social contract they were encouraged to believe in no longer holds, and the public expressions of that realization have grown more frequent and more urgent. Digital platforms have become the primary arena where these tensions surface, and the content that gains traction reveals shifting attitudes on both sides. Women post detailed breakdowns of monthly expenses showing how rent, utilities, groceries, transportation, and debt servicing now consume entire paychecks with nothing left for savings or discretionary spending. Others share timelines of job applications, rejections, and eventual acceptance of positions far below previous levels of responsibility or compensation. A common thread running through many of these accounts involves the discovery that single income living in major metropolitan areas has become mathematically unsustainable without significant external support, and the realization that such support is no longer reliably available. Some videos transition from frustration to strategic planning, showing women learning coding trades, real estate investment, personal finance fundamentals, or sales techniques that promise higher earning potential in the current market. These success oriented narratives coexist alongside more despairing ones that question the long term viability of independence without partnership or institutional backing. The range of responses illustrates a population in the midst of forced adaptation where outcomes vary widely depending on age, prior savings, network strength, adaptability, and sheer persistence. Men observing this landscape from their chosen distance rarely engage directly, yet their absence speaks volumes. They have internalized the lesson that attention, time, and resources given without reciprocal value represent poor investments, and they apply that principle consistently across all domains. Dating applications, once flooded with male profiles, now show declining activity from men under 40 who have concluded that the risk reward ratio no longer justifies participation. Social venues that depend on mixed gender patronage report lower attendance, particularly from men who prefer controlled environments where interactions occur on their terms, if at all. Financial transfers via payment apps from men to women have dropped sharply outside of established family obligations because the pattern recognition that once guided generosity now flags it as unsustainable behavior. The collective withdrawal has created a feedback loop where women experience greater economic pressure, which in turn prompts more visible appeals for change, which further solidifies men's resolve to maintain boundaries. This cycle operates without centralized coordination, yet it produces consistent outcomes across regions and demographics. Corporate boards facing activist investors and quarterly earnings calls have little patience for arguments that prioritize social goals over financial ones. Chief executives who fail to deliver on profitability targets face swift replacement, regardless of gender, and the data shows that men currently hold an overwhelming percentage of those turnaround capable profiles. Women who reach the C suite in this environment do so by demonstrating exceptional command of numbers, operational discipline, and strategic foresight, often after years of leading profit and loss responsible units through multiple business cycles. Their success stories receive coverage, but the rarity of such ascensions underscores how high the bar has been raised. Entry-level hiring has also tightened, with companies favoring candidates who arrive with specialized certifications, technical proficiencies, or proven internships in core functions rather than broad liberal arts degrees or general leadership potential. The shift rewards early specialization and relentless execution, which advantages individuals who focus narrowly on marketable skills from the outset. Young men who adopted this mindset early now enter the workforce better positioned than peers who pursued more generalized paths, expecting institutional support to bridge any gaps. The broader cultural reevaluation extends into education, where enrollment patterns have begun to reflect these new incentives. Male participation in STEM fields, engineering trades, and data related programs has climbed steadily as young men recognize that these areas offer clearer paths to financial independence and resistance to automation. Women continue to dominate fields such as psychology, education, social work, and certain healthcare specialties, yet many of those domains face funding constraints, wage stagnation, or direct competition from technology platforms that deliver similar services at scale. The mismatch between degree choices and emerging labor market demands has produced a generation of graduates who discover post graduation that their credentials command less earning power than anticipated. This realization has prompted mid career course corrections, with increasing numbers of women returning to technical boot camps, community college programs, or online certifications in high demand areas. The effort required for these pivots demands significant time and financial commitment, which becomes harder to sustain when current obligations already strain resources. Men who have fully embraced the walking away philosophy often describe a sense of liberation that grows stronger with each passing year. They maintain modest but comfortable living arrangements, usually paid off or low rent properties in quieter locations away from high cost urban centers. Transportation costs stay minimal through ownership of reliable used vehicles, bicycles, or simply living within walking distance of necessities. Food preparation emphasizes nutrition density and cost efficiency rather than convenience or display. Entertainment comes from free or low cost sources, including libraries, open source software, personal projects, and physical activities that require little equipment. To social connections, when desired, form through shared interest groups, online forums, or occasional in person meetups with other like minded men who value directness, competence, and mutual respect over performative interaction. Romantic involvement remains selective and low frequency, with clear boundaries established up front to prevent entanglement in legal or financial obligations. The structure allows for deep focus on personal missions, whether those involve building businesses, mastering crafts, traveling frugally, or pursuing intellectual interests without deadline pressure. This model of living has begun to influence adjacent areas of culture and commerce. Consumer brands that once targeted aspirational luxury or status driven consumption now see slower growth, while companies offering durable goods, minimalist design tools for self sufficiency, and educational content around financial independence experience surges in demand. Podcasts, channels, and newsletters centered on male self improvement discipline, stoicism, and economic realism consistently rank among the most listened to and shared in their categories. The audience growth reflects a hunger for frameworks that prioritize internal locus of control over external validation. Women who adopt similar principles of discipline, frugality, and skill stacking achieve comparable stability, yet their public content often carries additional layers of commentary about overcoming structural hurdles or redefining success outside traditional relationship models. The convergence of these approaches suggests that the underlying principles of personal responsibility and market alignment transcend gender, even as the pathways and obstacles differ. Looking ahead, the next decade will likely see further refinement of these divergent strategies as economic conditions remain challenging and technological displacement continues its march through additional sectors. Companies will keep leadership pipelines ruthlessly focused on proven performers capable of delivering in resource constrained environments. Men will deepen their commitment to sovereignty, refining systems that protect time, energy, and capital from unnecessary claims. Women will accelerate adaptation building networks, acquiring credentials, and creating income streams that withstand volatility. The society that emerges from these parallel tracks will feature greater individual variation, fewer assumed interdependencies, and sharper distinctions between those who prepared for uncertainty and those who did not. Cultural narratives will gradually shift away from collective empowerment toward pragmatic individualism because the evidence of what works in practice will become impossible to ignore. The men who walked away did not disappear from the world. They simply relocated their energy to arenas they fully control. And the results of that relocation now speak for themselves in the form of retained wealth, preserved mental health, increased optionality, and genuine contentment. Women who navigate the current landscape successfully will similarly demonstrate that capability and adaptability remain the decisive factors when external supports recede. The era defined by symbolic advancement and assumed provision has closed, and what replaces it rewards those who align expectations with reality rather than the other way around. The data on chief executive promotions serves as one clear signal among many that the rules have changed permanently, and the individuals thriving under the new rules are those who accepted that change earliest and acted accordingly without apology or hesitation. The story continues to unfold one rational decision at a time, and the outcomes will continue to sort themselves with increasing clarity as the years progress. The relentless march of technological displacement has not stopped at administrative and creative support roles. It now encroaches on domains once considered safely human, such as legal research, basic medical diagnostics, routine financial auditing, supply chain optimization, and even preliminary architectural drafting. Each wave of implementation removes another stratum of jobs that had provided stability and upward mobility, particularly for professionals who entered the market during the height of corporate expansion when headcount growth masked underlying inefficiencies. Organizations that previously absorbed these costs through abundant capital inflows or loose monetary policy now operate under tighter scrutiny, where every payroll dollar must justify itself against direct contribution to top line growth or bottom line preservation. The consequence is a workforce that contracts not through dramatic announcements, but through silent attrition, accelerated by tools that perform 24 hours a day without fatigue, benefits, or equity demands. This environment punishes overstaffing in non core functions and rewards lean structures where every position ties directly to revenue protection or expansion. Women who had clustered in expanding support layers during the prior decade now confront the sharpest edge of this blade because those layers shrank first and fastest when the imperative shifted to survival mathematics. Men who foresaw this trajectory years in advance avoided becoming embedded in vulnerable segments. They either specialized in areas resistant to full automation, such as field engineering, complex deal structuring, executive coaching, or hands on trades, or they exited Organizational employment entirely, building parallel income through ownership stakes, digital products, physical assets, or location independent consulting. The ones who chose complete independence cultivated what amounts to personal economic fortresses, modest in scale, yet extraordinarily durable. A paid off single family home or small condominium in a secondary market carries no mortgage risk and shelters against inflation through ownership rather than rent exposure. Utility bills stay low through deliberate energy choices and square footage that matches actual needs rather than social signaling. Vehicles, if owned at all, are selected for reliability, longevity, and minimal maintenance rather than monthly payments or brand prestige. Food systems revolve around bulk purchasing, home preparation, and seasonal eating, which slashes grocery expenditure while improving health outcomes. These interlocking systems create a buffer zone that absorbs shocks ranging from job loss to market corrections to sudden medical events. When broader employment instability struck in 2025 and continued into 2026, the men already operating within such frameworks registered minimal disruption, while others scrambled to restructure lives built on assumptions that proved fragile. Women adapting to this tightened reality have pursued several distinct strategies, each carrying its own probability distribution of success. One group has aggressively moved toward high barrier technical fields, investing 18 to 36 months in intensive training for software engineering, data science, cybersecurity, or cloud architecture. Those who complete the journey often secure roles with compensation packages that restore or exceed prior earning power. Yet the path demands exceptional discipline, sacrifice of immediate income, and tolerance for imposter feelings during steep learning curves. A second cohort has leaned into sales, particularly commission driven positions in enterprise software, medical devices, industrial equipment, or financial services, where raw performance overrides demographic considerations and top performers clear six figures regardless of background. Success here hinges on resilience, thick skin pattern recognition in client interactions, and relentless prospecting habits that many find exhausting yet rewarding when results materialize. A third approach centers on entrepreneurship, micro businesses, e commerce, drop shipping, content monetization, or service based freelancing, where control rests entirely with the individual and scaling depends on execution rather than permission from above. These ventures carry higher variance. Some fail quickly, others compound slowly into sustainable income, yet they offer insulation from corporate consolidation cycles. The fourth visible response involves geographic arbitrage. Women who once anchored themselves to high cost coastal cities or major metros have relocated to mid tier or smaller markets where housing costs drop 60 to 80%, while remote work opportunities preserve income levels earned in expensive locations. The move requires upfront capital for transition logistics and emotional fortitude to leave established networks, yet those who execute it well report dramatic improvements in monthly cash flow, quality of life, and psychological bandwidth. Rent that once consumed half a paycheck now takes 15%, leaving room for aggressive savings, debt repayment, skill investment, or simply breathing space. The trend has accelerated regional population shifts, reversing decades of urban concentration and breathing new life into secondary cities and rural counties that offer affordability, community, and lower crime exposure. Men pioneered this relocation pattern earlier, often choosing quiet towns with access to nature, low taxes, and minimal social pressure, and their continued satisfaction with the model has encouraged more women to consider similar moves when urban economics no longer pencil out. Public discourse around these changes, has fractured into competing narratives that rarely intersect. One segment maintains that systemic barriers still suppress female advancement and calls for renewed policy intervention, stronger enforcement of existing diversity mandates, or fresh legislation targeting promotion disparities. Another segment argues that market forces have simply exposed mismatches between skill portfolios and current demand, and that individuals bear primary responsibility for closing those gaps through targeted upskilling and strategic positioning. A third, quieter perspective acknowledges that cultural messaging of the prior 2 decades encouraged life designs incompatible with emerging economic constraints, and that course corrections, although painful, are inevitable when incentives realign so decisively. Men largely abstain from these debates, having already voted with their feet by reducing participation in systems they view as extractive or high risk. Their non engagement frustrates those who seek dialogue or restoration of previous patterns, yet it also removes pressure for justification, allowing the conversation to proceed among those still invested in institutional outcomes. Financial independence metrics tell a stark story of divergence. Men who adopted frugality discipline and aggressive saving in their 20s and 30s now frequently report net worth figures that place them in the top decile for their age cohort, despite middling or deliberately capped incomes. Compound interest on consistent contributions, low expense ratios, index fund, exposure, and avoidance of lifestyle creep create exponential separation over time. Women who followed conventional career ladders with higher consumption patterns, student debt burdens, or urban housing costs often reach the same age bracket with higher headline salaries, yet lower liquid assets, higher liabilities, and greater dependence on continued employment. The gap widens further when factoring in legal exposure, marriage dissolution statistics, and child related financial obligations that disproportionately affect men who enter traditional family structures. Awareness of these probabilities has influenced younger men to delay or forego marriage and parenthood viewing, both as optional rather than default settings. The resulting decline in marriage rates, household formation, and birth rates reshapes everything from housing demand to education planning to entitlement program solvency projections. Corporate culture has responded to these demographic realities by flattening hierarchies, reducing perks that once subsidized personal lifestyles, and tightening performance management. Gone are the lavish team building retreats, unlimited vacation policies that nobody actually used, and generous parental leave packages that inflated payroll without corresponding productivity gains. In their place stand clear expectations, transparent metrics, and swift consequences for underperformance. The environment feels colder to some, yet more honest to others who appreciate knowing exactly where they stand and what behaviors drive advancement. Promotions now hinge on irrefutable evidence of value creation rather than tenure, likability, or alignment with corporate social objectives. This meritocratic turn advantages individuals who thrive under objective scrutiny and disadvantages those who relied on relational capital or institutional goodwill. Young professionals entering today receive an unspoken but unmistakable message. Master high leverage skills, deliver outsized results, and build a personal brand around competence because no external narrative will shield you from market judgment. Men living independently have also redefined leisure and status in ways that challenge older assumptions. Luxury for them means time sovereignty rather than material accumulation. A weekday morning spent hiking without clock pressure, reading dense nonfiction in silence, or tinkering with mechanical projects carries more value than a designer watch or a curated social media feed. Social proof shifts from visible consumption to demonstrated capability, whether that manifests as physical strength, financial acumen, technical mastery, or calm under pressure. Peer groups form around shared philosophy rather than proximity or workplace ties, often sustained through encrypted chats, private forums, or infrequent but high quality in person gatherings. The absence of drama obligation and performance expectations creates space for authentic connection that many report as more satisfying than broader social networks ever provided. Romantic pursuits, when they occur, follow strict vetting protocols focused on character compatibility, low conflict disposition, and mutual self sufficiency. Casual dating has largely evaporated, replaced by intentional courtship or complete abstention, depending on individual temperament. Women who achieve similar independence describe parallel satisfactions, though often tempered by greater societal messaging that equates female fulfillment with relational roles. Those who reject that framing and build robust solo lives report comparable levels of contentment, especially after crossing the threshold where financial security becomes self sustaining. They invest in personal development, physical resilience, intellectual depth, and community ties that serve rather than drain. The model proves viable, yet requires discipline that many find harder to maintain without external accountability structures. Success stories in this vein receive less cultural amplification than tales of struggle, which creates a skewed public perception that independence remains elusive for most women when in practice, growing numbers demonstrate its feasibility through quiet, consistent execution. Looking forward, the next 5 to 10 years will likely entrench these patterns unless fundamental economic reversals occur. Artificial intelligence will continue displacing cognitive labor. Global competition will keep wage pressure downward in tradable sectors, and fiscal constraints will limit government capacity to backstop individual outcomes. Companies will select leaders who can thrive in that crucible, favoring battle tested operators over symbolic figures. Men will deepen their commitment to modular, self reliant lives, refining systems that deliver peace and optionality. Women will split between those who master the new game through relentless adaptation and those who resist or lag, creating visible stratification within their cohort. Society will feature fewer assumed interdependencies, greater personal accountability, and a cultural tone that values results over rhetoric. The men who walked away set the template early, and their continued flourishing serves as living proof that sovereignty built on realistic assessment outlasts models constructed on temporary conditions. The era of expansive promises has ended. The age of pragmatic navigation has begun, and those who adjust fastest define the terms of engagement going forward. The convergence of prolonged high interest rates, persistent inflation in essential goods, and structural labor market tightening has created an environment where financial runway becomes the single most decisive factor in personal outcomes. Households or individuals carrying significant debt service burdens, whether from student loans, credit cards, auto financing, or adjustable rate mortgages, face compounding pressure as rates remain elevated well into the second half of the decade. Those who entered adulthood during the zero interest era accumulated obligations under assumptions that would later prove unsustainable, and the adjustment period has proven brutal for anyone without substantial equity cushions or income streams insulated from wage stagnation. Men who began practicing extreme ownership of their finances in their early 20s avoided most of these traps by treating debt as an enemy rather than a tool. They paid cash for vehicles, lived in accommodations well below their earning capacity, and invested surplus aggressively into broad market equities, real estate crowdfunding, or private lending opportunities that generated yield without counterparty risk concentration. The result is a cohort that now possesses net positive cash flow even during periods of reduced employment or voluntary sabbaticals. Their lifestyles appear austere only from the outside. In reality, they operate with a level of optionality that allows them to ignore corporate volatility, consumer price spikes, and geopolitical disruptions that would otherwise force reactive decisions. Women who built financial structures during the same period but under different cultural guidance often prioritized experiences, credentials, relocation for career advancement, and consumption patterns aligned with social expectations of success. The combination produced higher visible markers of achievement, yet thinner margins of safety. When inflation eroded purchasing power and interest expenses climbed, many discovered that salary increases failed to keep pace with combined housing, transportation, education, and healthcare cost acceleration. The math became unforgiving, forcing prioritization choices that had previously seemed unnecessary, deferring retirement contributions, cutting discretionary spending, delaying family formation, or accepting secondary employment to cover baseline obligations. Public expressions of this strain appear daily in forums, comment sections, and short form video content, where women document the arithmetic of survival in real time, showing rent to income ratios approaching 50%, grocery bills that doubled in 3 years, and emergency funds depleted after one unexpected repair or medical visit. The tone ranges from analytical resignation to outright anger at systems that appeared to promise security through participation, yet delivered precarity when conditions shifted. Corporate responses to these macroeconomic headwinds have further entrenched the merit only paradigm at the top. Boards now routinely commission third party succession analyses that model leadership performance against specific economic scenarios, stress testing candidates on their ability to protect enterprise value during recessionary periods, supply chain fractures, or rapid technological obsolescence. The preferred profile emphasizes proven crisis navigation, deep operational fluency, ruthless resource allocation, and an almost obsessive focus on free cash flow generation. Gender enters the equation only as a historical footnote when diversity reports are filed, not as a forward looking criterion for selection. Women who ascend under these conditions do so by compiling track records that would be considered exceptional for anyone amassing multi year leadership of billion-dollar P&Ls, turning around underperforming divisions, or engineering successful divestitures during buyer scarce markets. Their presence at the table reinforces rather than challenges the new standard because every decision they make faces the same unforgiving scrutiny applied to their male counterparts. The visibility of these rare breakthroughs creates a perception of progress that masks the broader reality. Most pathways to the C suite have narrowed to a handful of hyper competitive funnels where pedigree, performance, and timing must align perfectly. Young men observing this landscape have internalized the message with striking clarity. University career centers still promote broad based leadership development, networking events, and internship pipelines geared toward brand name employers, yet attendance from male students has noticeably declined in favor of self directed learning paths. They gravitate toward platforms offering micro credentials in cloud infrastructure penetration, testing, quantitative trading, algorithmic development, or renewable energy systems integration, because those skills translate directly into freelance contracts, remote roles, or startup equity stakes that bypass traditional gatekeepers. The mindset shift treats employment as one optional vector among many rather than the central organizing principle of early adulthood. Side projects, open source contributions, personal trading accounts, and small scale e commerce experiments receive the same serious attention once reserved for resume padding activities. The goal is to build multiple independent income legs so that no single failure, corporate or otherwise, can threaten baseline security. This approach mirrors the anti fragility cultivated by their slightly older counterparts who walked away earlier and now serve as living case studies that the model scales across different starting points and risk tolerances. Women entering the same age bracket face a more complex calculus. They encounter persistent messaging that encourages ambition, visibility, personal branding, and collective advocacy. Yet the labor market feedback loop rewards narrow specialization, relentless execution, and low visibility competence. Those who attempt to balance both worlds often experience cognitive dissonance when social media fueled narratives of empowerment collide with rejection emails, salary negotiations that stall at market medians, and promotion cycles that favor longer tenured operators. The adaptive response gaining traction involves ruthless prioritization, dropping extracurriculars that do not directly enhance marketability, seeking mentors who speak in terms of dollars and deliverables rather than inspiration, and building financial literacy concurrently with the technical mastery. Communities of women focused on these principles have emerged online, sharing detailed breakdowns of salary histories, negotiation scripts, side hustle revenue trackers, and geographic relocation spreadsheets that optimize for after tax purchasing power. The content differs markedly from earlier waves of career advice that emphasize networking, personal style, and executive presence. The current tone is clinical, almost militaristic in its emphasis on measurable advantage and defensive positioning. The demographic implications of these individual level adaptations compound into macro level shifts that policymakers and economists are only beginning to grapple with fully. Marriage rates continue their multi decade descent not primarily from cultural rejection, but from straightforward economic math. Many men view the legal, financial, and opportunity cost risks as disproportionate to potential benefits, while many women conclude that partnership no longer provides the economic uplift it once did. Household formation slows, which depresses demand for starter homes, family sized vehicles, and child oriented consumer goods. Birth rates fall further, straining future entitlement funding models and labor force replacement dynamics. Urban centers built around dual income professional couples see softening real estate prices in certain segments, while secondary markets with lower entry barriers experience relative strength as remote capable singles and child free couples relocate for affordability. Retail footprints contract in categories tied to status. Consumption expand in durable goods tools for self sufficiency and experiences that require minimal ongoing commitment. The economy gradually reorients around smaller, more modular their living units, higher savings rates, and greater individual control over consumption patterns. Men who have fully internalized sovereignty describe the lifestyle in almost monastic terms without the religious overlay. Days follow self imposed rhythms built around physical training, intellectual work, income generating tasks, and deliberate rest. External noise, political outrage, social comparison, performative virtue fades into irrelevance because it carries no actionable consequence for their immediate circumstances. Relationships, whether platonic or romantic, enter the frame only when they enhance rather than drain resources, and most report that solitude has proven far less lonely than relationships marked by unspoken expectations, mismatched risk tolerances, or chronic negotiation. The peace derived from this arrangement grows addictive because it rests on foundations entirely within personal control. No board vote, no court order, no cultural shift can revoke it without direct infringement on private property or bodily autonomy. That security allows experimentation in areas previously deemed frivolous learning, musical instruments, writing long form essays, restoring vintage machinery, traveling off season to avoid crowds pursuing spiritual or philosophical inquiry without timeline pressure. The cumulative effect is a life that feels expansive despite objective material modesty. Women who achieve comparable independence often frame their journey differently, emphasizing overcoming initial disadvantages, accumulated cultural baggage, or structural headwinds. Yet the end point mirrors the male experience in key respects: financial breathing room, temporal autonomy, psychological resilience, and freedom from obligatory performance. They too report that solitude becomes neutral or positive once basic security thresholds are crossed, and that relationships pursued afterward carry stricter criteria because the cost of disruption is now acutely understood. The parallel evolution suggests that the underlying driver is not gender specific ideology, but exposure to the same economic pressures and the same discovery that self command offers the highest return on invested effort. Differences persist in public presentation. Women tend to document the process more transparently, sharing setbacks, pivots, and incremental wins, while men often maintain radio silence, letting outcomes speak without commentary, yet the mechanics of adaptation remain strikingly similar. Corporate America shows no sign of reversing course. Shareholder activism continues to push for leaner operations, higher margins, and disciplined capital allocation, which translates into leadership teams selected for their capacity to execute that agenda without distraction. Chief executive tenures shorten when performance lags, and replacement candidates come almost exclusively from pools of executives who have already delivered under similar constraints. The pipeline for female advancement at that level therefore depends on women accumulating exactly those experiences in sufficient volume and visibility, which requires navigating environments that remain majority male at senior levels. Success becomes possible, but probabilistic and heavily contingent on early career choices that prioritize line roles, revenue responsibility, and measurable impact over staff functions, advisory positions, or diversity focused initiatives. The women who crack through tend to share common traits: obsessive preparation, relentless self education comfort with conflict, and an almost contrarian willingness to ignore prevailing cultural winds in favor of what the data rewards. As the decade progresses, the divergence between those who adapted early and those who delayed becomes more pronounced and more permanent. Compound effects in finance, skill accumulation, network quality, physical health, and psychological durability create separation that later interventions struggle to close. Men who built sovereignty in their 20s now enter their 40s with assets, optionality, and calm that position them to weather whatever comes next, whether accelerated automation, another monetary regime, shift, geopolitical realignment, or domestic policy volatility. Women who pivoted decisively in their late 20s or early 30s reach similar ground, though often after steeper initial climbs and with greater public scrutiny of their choices. Those who have not yet pivoted face lengthening odds as the labor market continues to reward specialized competence over generalist potential, and as personal financial buffers erode under sustained inflationary pressure. The broader culture begins to reflect these realities in subtle yet unmistakable ways. Media narratives shift from celebration of barrier breaking to pragmatic profiles of individuals who thrive through discipline and adaptation. Advertising moves away from aspirational excess toward utility, durability, and self reliance. Educational institutions quietly adjust curricula, expanding trade programs, data science tracks, and financial literacy requirements, while liberal arts pathways contract or reorient toward practical application. Social expectations loosen around traditional milestones, marriage, parenthood, home ownership, executive titles as visible markers of adulthood lose their former weight. In their place emerge new status signals, consistent profitability, physical capability, mental clarity, and freedom from external obligation. The transition feels uneven and at times contentious, yet the direction remains clear outcomes sort themselves according to alignment with reality. And those who achieve that alignment earliest accumulate advantages that prove difficult to overtake. The men who walked away did not vanish. They simply built parallel systems that operate beyond the reach of institutional decay and cultural noise. Their continued existence and quiet prosperity serve as empirical proof that sovereignty constructed on realistic premises outlasts models reliant on temporary tailwinds. Women who forge comparable paths demonstrate that the same principles apply universally when applied with sufficient rigor. The era that promised collective elevation through advocacy and representation has given way to one that rewards individual calibration to hard constraints. The sorting process continues daily through choices large and small, and the scoreboard updates itself without sentiment or negotiation. Those who read the new rules correctly and act decisively write the next chapter. Those who wait for reversion to a prior mean find themselves increasingly sidelined by the arithmetic of a world that no longer bends to aspiration alone. The tightening grip of economic selection pressure has produced a generation of young adults who approach adulthood with a level of skepticism that previous cohorts rarely displayed at the same age. Boys who grew up watching their fathers navigate divorce proceedings, asset division custody battles, and ongoing financial obligations emerged with an instinctive wariness toward legal entanglements that promise stability yet frequently deliver extraction. They absorb the lesson that contracts involving shared finances, shared residences, or shared offspring carry asymmetric downside risk, and they adjusted their life architecture accordingly. Many deliberately structure their 20s around building unencumbered capital rather than acquiring dependents or liabilities that could be weaponized in future disputes. This manifests in choices as granular as maintaining separate bank accounts, even in casual dating scenarios, avoiding cohabitation without ironclad legal agreements, and treating marriage proposals with the same due diligence applied to major investment decisions. The pattern is not driven by bitterness, but by pattern recognition sharpened through observation of real world outcomes rather than idealized cultural scripts. Girls raised in the same era received a different but equally consequential set of inputs. They were repeatedly told that career velocity, personal branding visibility, and financial independence constituted the complete formula for security and fulfillment. The messaging arrived from every direction: schools, media, family members, influencers, and corporate human resources departments that offered mentorship programs, workshops, and affinity groups designed to accelerate female advancement. Yet, as those women reached their late 20s and early 30s, many discovered that the promised security proved conditional on continuous high earning employment in an increasingly selective labor market. When that employment faltered through layoffs, departmental eliminations, or automation, the absence of fallback structures became glaringly apparent. Savings rates that appeared respectable on paper evaporated under urban rent inflation, healthcare deductibles, and student loan payments that refused to shrink. The realization that independence required far more capital than previously estimated prompted a subset to recalibrate, aggressively pursuing aggressive side income streams, geographic relocation credential stacking, or even temporary return to family homes to reset financial baselines. This dual track awakening has reshaped mating dynamics in ways that statistics only partially capture. Dating app usage among men under 35 has declined markedly in major cities, as many conclude that the time investment yields diminishing returns relative to personal pursuits. When engagement does occur, it follows stricter filters centered on observable compatibility rather than surface level attraction or social proof. Men increasingly screen for evidence of financial responsibility, emotional stability, low conflict history, and genuine self sufficiency because any hint of entitlement or reliance on external provision raises immediate red flags. Women who meet those criteria report higher quality interactions, yet also note that the pool of willing participants has shrunk and the courtship pace has slowed dramatically. Casual encounters have largely evaporated, replaced by deliberate evaluation periods that can stretch months before exclusivity is considered. The overall effect is a market that has become thinner, more discerning, and far less impulsive than it appeared during the height of hookup culture prevalence. Economic geography has shifted in tandem with these personal level changes. Primary metropolitan areas that once functioned as magnets for ambitious young professionals now experience selective outmigration among single men and women who calculate that after tax purchasing power net of housing, transportation, and social overhead no longer justifies the premium. Mid-sized cities located within reasonable distance of major tech finance or healthcare hubs have gained population as remote capable workers relocate to capture lower cost bases without sacrificing income. Smaller towns with strong natural amenities, low crime rates, and emerging gig economy infrastructure have seen even sharper increases, particularly among men who prioritize solitude, physical recreation, and minimal municipal interference. Women following the same logic often cluster in places that offer robust professional networks for remote roles access to continuing education facilities and communities that support single female living without stigma. The resulting population flows create new regional economic poles where affordability, self reliance, and pragmatic social norms dominate over status competition and density driven consumption. Corporate real estate footprints reflect the same underlying forces. Many firms have permanently downsized office square footage after discovering that hybrid arrangements combined with automation reduce the need for daily in person presence. Empty floors in trophy towers signal a broader retreat from prestige driven overhead and a corresponding emphasis on distributed talent pools that minimize fixed location costs. This decentralization benefits independent operators who can live wherever cost of living advantages align with lifestyle preferences while still accessing high value contracts. The men who mastered remote productivity early now command premium rates because their output remains consistent regardless of physical coordinates. Women who have built similar capabilities find themselves in strong positions, yet they frequently report greater pressure to maintain visibility through constant availability, performative collaboration, and over communication to offset lingering perceptions of lower commitment in distributed environments. Financial instruments and vehicles have evolved to serve this emerging class of sovereign individuals. Low cost robo advisors, index funds with rock bottom expense ratios, real estate investment trusts that allow fractional ownership, and peer to peer lending platforms have democratized access to compounding mechanisms that once required significant starting capital or institutional access. Men who automated monthly contributions in their early 20s now watch portfolios grow at rates that outpace inflation and lifestyle creep, providing insulation against employment gaps or entrepreneurial experiments. Women who began similar habits later often accelerate contributions aggressively, using windfalls, tax refunds, bonuses, or side hustle revenue to close the gap created by delayed starts. Both groups increasingly favor assets that generate cash flow over speculative appreciation because predictable income streams enhance optionality without requiring constant market monitoring. Tax strategy has become another domain of intense focus. High earners who remain in high tax jurisdictions employ legal structures such as solo 401k plans, defined benefit cash balance plans, health savings accounts, and charitable donor advised funds to minimize current liability while maximizing deferred growth. Those who relocated to lower tax states or countries gain additional leverage through residency based exemptions and reduced exposure to wealth transfer mechanisms. The cumulative savings fund, longer runways, greater risk tolerance, and earlier financial independence, which in turn reinforces the decision to maintain distance from traditional obligation heavy life scripts. The knowledge that every dollar retained compounds rather than funds external claims creates powerful behavioral reinforcement loops that sustain frugality long after basic needs are met. Health optimization has likewise become non negotiable for those pursuing long term sovereignty. Men and women who recognize that medical expenses represent one of the largest uncontrolled variables in personal finance invest heavily in prevention, strength training, mobility work, sleep hygiene, and nutrition tracking. Wearable devices provide real time feedback on heart rate variability, sleep stages, recovery metrics, and movement patterns, allowing precise adjustments that reduce future healthcare utilization. Many maintain private insurance with high deductibles paired with health savings accounts that function as additional retirement vehicles while covering catastrophic events. The approach treats the body as the foundational asset because breakdown at any point can erase years of financial progress in weeks. This mindset shift elevates physical discipline from vanity project to strategic imperative, and the visible results leaner, stronger, more resilient physiques serve as quiet proof of internal governance. Community structures among the sovereign have evolved into loose federations rather than tight knit tribes. Online forums, private discords, encrypted messaging groups, and occasional regional meetups facilitate exchange of tactical knowledge negotiation templates, investment theses, relocation guides, and psychological coping strategies without demanding ongoing emotional labor. Participation remains voluntary, contribution based, and ruthlessly meritocratic. Individuals who add value through detailed breakdowns, original research, or contrarian insight gain influence, while those who seek validation without offering substance drift away naturally. The model minimizes drama, maximizes signal to noise ratio, and preserves individual autonomy, which participants cite as the primary reason they remain engaged. Children enter the picture only after exhaustive cost benefit analysis that weighs financial requirements, time demands, legal exposure, educational options, and long term legacy goals against alternative uses of resources. Many conclude that the net present value turns negative under current conditions and opt out entirely pursuing fulfillment through other channels. Those who choose parenthood do so deliberately, often later in life after capital accumulation has reached a threshold that allows one partner or both to step back from full time employment without lifestyle compression. Single parenthood remains rare by choice as the economic and logistical burden falls disproportionately on one individual, and few view it as viable without substantial pre existing wealth or family support. The cultural residue of earlier empowerment narratives lingers in certain pockets, yet its influence wanes as lived experience contradicts its central promises. Workshops, seminars, and coaching programs that once commanded premium pricing now compete with free or low cost resources that deliver tactical rather than inspirational content. The market has spoken clearly. People pay for frameworks that produce measurable improvements in net worth, optionality, or peace of mind, not for motivational platitudes that evaporate under real world pressure. This shift mirrors the broader realignment across institutions where symbolic value has surrendered to functional utility. Looking across the next 10 to 15 years, the trajectory points toward even greater stratification between those who mastered self command early and those who continue to wait for external conditions to improve. Compound advantages in capital health knowledge and network quality create separation that becomes nearly insurmountable without extraordinary intervention. Sovereign individuals of both sexes will likely constitute a growing minority that thrives quietly, while broader populations grapple with lengthening periods of underemployment, stagnant real wages, and eroding social safety nets. The men who walked away provided the initial template. Their continued existence demonstrates that withdrawal, followed by deliberate reconstruction, yields durable results. Women who have forged parallel paths prove that the same mechanics apply when executed with equivalent rigor. The society that emerges will feature fewer universal assumptions, more granular life designs, and a cultural tone that respects outcomes over intentions. The era of expansive promises delivered through collective action has closed the age of precise calibration to unyielding constraints has taken its place. And those who navigate it successfully will define prosperity on terms that previous generations would barely recognize. The hardening reality of 2026 has forced a reevaluation of what constitutes true leverage in an age where institutional promises evaporate faster than savings accounts earn interest. Young men who once viewed college as the default gateway to middle class security now treat it as one high risk option among several with a clear cost benefit ledger attached. Trade schools, apprenticeships, coding boot camps, self taught certification paths, and direct entry military service have gained equal or greater status in their decision matrices because each route promises faster entry into cash flow, positive territory without the decade long debt overhang that accompanies many 4 year degrees. The men choosing these paths often cite the same reasoning observable ROI speed to market immunity from campus cultural dynamics and avoidance of credential inflation that has turned once prestigious diplomas into expensive pieces of paper with diminishing signaling power. They enter the workforce earlier, accumulate real world experience sooner, and begin compounding earnings while their peers remain locked in lecture halls or graduate programs, chasing theoretical mastery that markets increasingly disregard. Women navigating the same fork in the road face additional crosswinds. The cultural script still pushes university attendance as a non negotiable step toward empowerment, and many follow it expecting the degree to unlock doors that prior generations accessed more readily. Yet the post graduation landscape greets them with entry level salaries that barely cover rent in the cities where most desirable jobs cluster student loan payments that rival car notes and hiring managers who prioritize demonstrated output over pedigree. The dissonance between expectation and delivery has sparked a quiet but growing exodus from traditional academic tracks toward accelerated skill acquisition models that mirror the male pattern, though often with greater urgency, driven by awareness that time lost in unmarketable pursuits compounds disadvantage exponentially. Women who pivot early into quantitative fields, healthcare adjacent roles, logistic coordination, or sales engineering report steeper initial climbs followed by sharper upward trajectories once competence is proven, because those domains remain hungry for talent that can deliver under pressure rather than simply occupy space. Entrepreneurship has become another major vector for sovereignty, with both sexes launching micro ventures that require minimal upfront capital yet scale through digital leverage. Print on demand stores, niche content sites, automated SaaS tools, dropshipping operations, affiliate marketing funnels, and service arbitrage businesses proliferate because they allow individuals to test hypotheses with low downside and capture upside without seeking permission from gatekeepers. Men tend to gravitate toward models that emphasize automation, passive income streams, and one time setup effort, while women frequently build around personal expertise, community building, or relationship driven sales. Yet the underlying philosophy remains identical. Control the means of production, capture the full value created, and minimize dependence on any single counterparty, whether employer, client, or platform algorithm. Success in these arenas rewards obsessive testing, rapid iteration, customer obsession, and willingness to kill underperforming experiments without emotional attachment. The winners emerge not through charisma or connections, but through relentless execution of small edges that compound into defensible moats. The rise of decentralized finance, crypto staking, yield farming, decentralized autonomous organizations, and blockchain based identity systems has introduced yet another layer of optionality for those willing to master the technical and regulatory complexities. Early adopters who weathered the volatility cycles of 2021 through 2024 now sit on portfolios that provide substantial passive yield or serve as collateral for low cost borrowing that funds additional ventures. Men who enter this space with disciplined risk management have used it to accelerate timelines to location independence or full retirement from active labor, while women who joined later often focus on stablecoin strategies, lending protocols, and tokenized real world assets that offer predictable returns with lower drawdown risk. The technology democratizes access to financial tools once reserved for institutions, allowing sovereign individuals to hedge against currency, debasement, capture yield on idle capital, and build wealth outside traditional banking rails that increasingly demand compliance with social and political mandates. Privacy has likewise become a strategic asset rather than an afterthought. Men and women who prioritize sovereignty invest in encrypted communication tools, VPNs, hardware wallets, pseudonymous online identities, and decentralized storage solutions to reduce surface area for surveillance data, harvesting, or arbitrary account freezes. The motivation stems from recognition that digital footprints can be weaponized through doxing cancellation campaigns, algorithmic deboosting, or regulatory overreach, and that maintaining separation between public persona and private affairs preserves maneuverability. Practical steps include using burner devices for high risk activities, routing communications through privacy focused relays, and structuring asset ownership through trusts or anonymous entities where legally feasible. The cumulative effect is a life where external actors, whether corporations, governments, or hostile individuals, possess far less leverage to disrupt personal plans. Physical security has risen in parallel importance as urban crime statistics trend upward in many jurisdictions and trust in institutional response weakens. Men who relocated to lower density areas often cite personal safety as a primary driver, alongside affordability and reduced social friction, while women who remain in cities or move to new ones, increasingly incorporate layered defenses. Home hardening, concealed carry training, situational awareness, and community watch participation into daily routines. Firearms instruction, self defense courses, emergency medical training, and basic survival skills have shed much of their former cultural baggage, becoming pragmatic additions to the sovereignty toolkit for anyone who understands that first response times can stretch into hours during periods of civil unrest or resource strain. The mindset treats personal protection as an extension of financial and digital self reliance because vulnerability in any domain creates cascading risk. Longevity research and biohacking have moved from fringe interest to mainstream practice among those who view extended health span as the ultimate multiplier of accumulated advantage. Blood work panels at every 6 months track biomarkers such as fasting insulin, HbA1c, homocysteine, ApoB, LPA, and inflammatory markers, guiding precise interventions through diet, sleep optimization, supplementation, peptide protocols, or off label pharmaceuticals. Strength training protocols emphasize progressive overload, compound movements, and recovery management, while cardiovascular work focuses on zone 2 efficiency and VO2 max development. Many maintain detailed logs correlating lifestyle inputs with objective outputs, creating personal experiments that refine interventions over years. The goal is not vanity, but preservation of cognitive and physical capacity into the seventh and eighth decades, allowing continued wealth building option exercise and enjoyment long after traditional retirement age has passed. Intergenerational wealth transfer strategies have also evolved under the new constraints. Rather than assuming automatic inheritance or relying on state pension systems, those who have built significant capital focus on lifetime gifting, dynasty trusts, irrevocable life insurance wrappers, charitable remainder, trust, and educational 529 plans structured to minimize tax leakage and protect assets from future legal or policy changes. Men who remain child free often direct legacy planning toward scholarship funds, open source projects, or causes aligned with personal values, while women who choose parenthood prioritize trusts that shield assets from potential future divorce claims or creditor actions. The common thread is proactive defense of what has been earned against erosion through taxation, entitlement claims, or familial entitlement. Social dynamics within this emerging class have settled into a low maintenance equilibrium. Friendships form around shared competence rather than proximity or sentiment, with interactions spaced months or years apart, yet carrying high signal value when they occur. Conversations center on tactics, results, and contrarian observations rather than emotional processing or validation seeking. Romantic partnerships, when pursued, operate under explicit frameworks that define roles, expectations, exit conditions, and asset separation from day one. Cohabitation agreements, prenuptial contracts, postnuptial updates, and regular financial transparency reviews have become standard practice among those who enter long term arrangements because the cost of ambiguity has proven too high in observed cases. The result is relationships that survive only when both parties maintain independent strength and mutual benefit remains clear and ongoing. Cultural output from this group remains understated yet influential. Long form essays, technical breakdowns, financial case studies, philosophical reflections, and tactical guides circulate in private channels or pseudonymous publications, reaching audiences hungry for unfiltered analysis. The tone avoids moralizing, focuses on what demonstrably works, and discards what fails under scrutiny. Influence spreads through value provided rather than follower count or algorithmic favor, creating a decentralized intellectual commons where ideas compete on merit alone. As 2030 approaches, the stratification visible today will likely harden into semi permanent classes defined not by birth or credential, but by decade earlier decisions around disciplined capital allocation and risk assessment. Those who internalized sovereignty principles in their 20s will enter middle age with compounding advantages that border on unfair from the perspective of later starters. The men who walked away first laid the groundwork, proving that withdrawal followed by reconstruction produces resilient outcomes. Women who adopted parallel strategies demonstrate that the framework is universal when executed with equivalent intensity. Society will continue sorting itself along these lines, rewarding alignment with unyielding economic and technological realities while penalizing reliance on outdated assumptions or institutional crutches. The transition remains uncomfortable for many, yet the direction is set. Those who calibrate fastest and most precisely will inhabit a world of expanding possibility, while those who delay or deny face a narrowing set of options. The scoreboard operates without pity, and the game continues one rational choice at a time. The acceleration of remote and hybrid work models has permanently altered the calculus of where sovereign individuals choose to anchor their lives and how they structure their daily existence. Cities that once commanded premium pricing through density, networking density, and prestige have lost much of their gravitational pull for anyone whose income no longer ties to a physical office. The men and women who mastered remote productivity during the 2020 to 2022 transition now treat location as a pure optimization variable rather than a fixed constraint. They run spreadsheets that weigh average home price per square foot, local tax burden, crime index, walkability score, average commute time to amenities quality of public schools, if relevant, internet upload download speed, seasonal weather patterns, and proximity to international airports for occasional travel. Secondary and tertiary markets with strong fiber optic infrastructure, low property taxes, moderate climates, and access to nature consistently rank highest in these models. Places like Boise, Raleigh, Asheville, Chattanooga, Knoxville, Boise again, Huntsville, and certain pockets of the Carolinas, Texas Hill Country, and inland Pacific Northwest have absorbed waves of relocators who arrive with coastal level earnings and immediately become top tier consumers in their new communities. The economic multiplier effect is noticeable in local real estate appreciation, restaurant, quality grocery options, fitness facilities, and even cultural offerings that previously lagged far behind major metros. Those who remain in high cost primary cities do so deliberately, usually because their income derives from roles that still require occasional face time in boardrooms, client dinners, or regulatory environments that favor proximity to power centers. Even in those cases, the footprint shrinks dramatically. One-bedroom condominiums replace sprawling suburban houses, shared co-working spaces replace dedicated offices, and public transit or e-bikes replace personal vehicles to eliminate parking insurance and maintenance drag. The lifestyle compresses to essentials high earning work, deliberate social exposure, and aggressive saving, investing the difference created by avoiding lifestyle inflation. Many report that the trade off feels worthwhile only because the professional network density and deal flow still outweigh the financial bleed, but they acknowledge that the margin narrows every year as virtual meeting technology improves and trust in remote collaboration deepens. The sovereign mindset has also reshaped consumption patterns in ways that ripple through entire supply chains. Brands built on planned obsolescence status signaling and frequent replacement cycles face declining demand from this cohort. Durable goods that emphasize repairability, longevity, and timeless design see sustained interest, whether that means mechanical watches over smartwatches, wool over synthetic blends, cast iron cookware over nonstick Teflon, or full grain leather over fast fashion alternatives. Minimal wardrobes built around versatile high quality pieces become the norm, reducing both storage needs and decision fatigue. Home setups prioritize function, multi use furniture, standing desks with integrated cable management, ergonomic chairs that last a decade, and modular shelving that adapts to changing needs rather than aesthetic trends. The shift away from conspicuous consumption toward inconspicuous quality has forced retailers to adapt or lose market share, with many pivoting to direct to consumer models that cut middlemen and emphasize transparency around material sourcing and durability testing. Energy independence at the household level has emerged as another quiet but powerful trend. Solar panel installations paired with battery storage home energy monitors and smart thermostats allow individuals to slash utility bills, hedge against grid instability, and in some jurisdictions sell excess power back to utilities at favorable rates. Men who relocated to sunnier secondary markets often add ground mount arrays or community solar subscriptions, while urban dwellers invest in balcony solar, portable power stations, and efficient appliances that minimize draw. The motivation combines financial arithmetic, environmental pragmatism, and a desire for insulation from centralized failures, whether those stem from weather events, cyber attacks, or policy driven price spikes. Households that achieve net zero or near net zero status report a psychological lift from knowing their baseline needs remain met regardless of external shocks. Food systems have undergone similar decentralization. Home gardening, hydroponic setups, community supported agriculture subscriptions, bulk buying clubs, and direct from producer relationships reduce reliance on industrial supply chains that prove vulnerable to labor shortages, transportation bottlenecks, and input cost inflation. Many maintain small indoor grows for herbs, leafy greens, and microgreens, supplementing with local farmers, markets, co ops, and occasional hunting or fishing where legal and feasible. Meal preparation emphasizes nutrient density, batch cooking, and preservation techniques, freezing, dehydrating, fermenting, canning that extends shelf life and lower per meal costs. The approach treats nutrition as a performance variable rather than a hedonic one, tracking macros, micros recovery markers, and subjective energy levels to fine tune inputs for maximum output across mental clarity, physical resilience, and mood stability. Mental fortitude training has become as deliberate as physical programming. Daily meditation, breath work, journaling, cognitive behavioral exercises, stoic reading, and exposure to voluntary discomfort, cold showers, heavy lifts, public speaking, or fasting protocols build psychological anti fragility that complements financial and physical buffers. Men and women who practice these disciplines consistently report greater equanimity during market drawdowns, career setbacks, or personal betrayals because the internal locus of control has been strengthened to the point where external chaos loses much of its emotional charge. Therapy, when sought, focuses on tactical skill building rather than endless processing, with preference given to practitioners who emphasize evidence based techniques over exploratory talk. The overarching goal is a mind that treats adversity as data rather than catastrophe, allowing faster pattern recognition, course corrections, and return to baseline function. Knowledge acquisition has shifted decisively toward applied mastery over credential accumulation. Online platforms offering deep dive courses in specific high value domains see sustained enrollment from individuals who treat learning as an investment with clear payback periods. Courses in advanced Excel power, BI School Python, AWS Azure, cybersecurity penetration testing options, trading real estate underwriting, private equity structuring, and negotiation frameworks command attention because they translate directly into higher hourly rates, freelance contracts, or internal promotions. The self directed learner sets measurable milestones, tracks time to competence, and iterates on study methods using spaced repetition, active recall, and deliberate practice to compress years of traditional progression into months. The result is a workforce that advances through demonstrated capability rather than institutional stamps, creating a meritocracy that operates outside legacy gatekeeping structures. Philanthropy among the sovereign takes on a targeted, precise character rather than broad institutional giving. Direct cash transfers to individuals in crisis funding. Open source developers supporting local makerspaces, sponsoring trade school scholarships, or underwriting community infrastructure projects allow donors to observe impact firsthand without layers of administrative overhead. Many maintain small personal foundations or donor advised funds that focus on causes aligned with lived values, self reliance, skill building resilience, and truth seeking. The approach avoids virtue signaling organizations that prioritize optics over outcomes and instead channels resources toward efforts that produce verifiable returns in human capability or community durability. Travel, when pursued, emphasizes depth over breadth. Slow travel, digital nomadism with multi month stays in low cost, high quality locations, or intentional pilgrimages to places that offer historical, philosophical, or natural significance. The goal is enrichment through immersion rather than checklist tourism, with preference for off season, shoulder season destinations that provide space, solitude, and authentic interaction over crowds and performative experiences. Remote work capability turns travel into a seamless extension of normal life rather than a temporary escape, allowing income generation to continue while geography changes. As the sovereign cohort ages into their 30s and 40s, the focus increasingly turns toward legacy beyond personal consumption. Some build businesses with the explicit intention of creating generational wealth. Others document their frameworks through books, courses, open source code, or detailed public case studies that others can replicate. Mentorship occurs informally through forums, meetups, or one on one relationships where value flows both ways. Experienced operators gain fresh perspectives while newcomers receive battle tested shortcuts. The transmission of practical wisdom becomes a force multiplier, amplifying the impact of individual decisions across wider networks. The broader economy continues to bifurcate between sectors that reward human judgment, creativity, physical execution, and relationship depth versus those that succumb to full automation, algorithmic replacement, or offshoring. Winners concentrate in defense aerospace, advanced manufacturing, specialized healthcare complex, litigation, high stakes sales, strategic consulting, elite trades, and proprietary technology development. Losers cluster in routine cognitive work, standardized processes, easily codified services, and industries facing secular demand erosion. Sovereign individuals position themselves almost exclusively on the winning side, either by mastering irreplaceable skills, owning the means of production, or maintaining such low fixed costs that they can survive indefinitely on minimal income. Cultural narratives struggle to keep pace with these ground level shifts. Media still circulates stories of glass ceilings, empowerment anthems, and collective grievance. Yet those messages resonate less with audiences who have internalized that outcomes follow capability, discipline, and timing far more than advocacy or moral framing. The loudest voices increasingly speak to shrinking audiences, while quieter channels dedicated to tactics, results, and unvarnished analysis gain steady traction through word of mouth and algorithmic under the radar amplification. By the early 2030s, the template set by the men who walked away has evolved into a mature, scalable model adopted in varying degrees by hundreds of thousands across demographics. Women who embraced parallel principles have closed much of the early adopter gap, demonstrating that sovereignty transcends gender when rooted in realistic assessment of incentives, constraints, and probabilities. Society sorts itself not along ideological lines, but along execution lines. Those who calibrated earliest and most ruthlessly enjoy widening moats of time, freedom, capital, health, and optionality, while those who delayed face lengthening catch up ladders with steeper slopes. The transition feels relentless because it is the underlying physics of scarcity, competition, and compound effects admit no appeals. The era that romanticized endless expansion through borrowed time and borrowed money has ended. The era that rewards precise alignment with finite resources has solidified, and those who mastered that alignment write the operating manual for whatever comes next. One disciplined, repeatable choice after another. The sovereign model that began as a quiet reaction to shifting incentives has matured into a comprehensive life architecture capable of sustaining itself through decades of economic turbulence, technological upheaval, and cultural drift. By the mid 2030s, individuals who adopted its core principles early now occupy positions of extraordinary resilience, not because they amassed vast fortunes, but because they engineer systems where baseline existence requires minimal external input. A typical setup might include a fully owned, modest home in a stable secondary market, generating no mortgage drag solar arrays and battery storage covering 90% of electricity needs a well water system or municipal supply with backup filtration, a garden supplemented by local co op deliveries, and a pantry stocked through bulk purchasing that keeps food costs under $300 monthly for a single person. Transportation relies on a paid for vehicle maintained meticulously or an electric bicycle for short distances paired with occasional ride sharing when needed. Healthcare stays managed through high deductible catastrophic plans, health savings accounts funded aggressively, and a personal emphasis on prevention that keeps utilization low. Income streams diversify across a primary remote role, one or two side ventures, automated digital products, dividend equities, rental income from a small secondary property, or peer to peer lending and occasional consulting that activates only when rates exceed a preset threshold. The structure produces consistent positive cash flow even during periods when any single stream dips or disappears entirely. Women who built comparable systems often arrive at similar configurations, though their journeys frequently involve overcoming higher initial hurdles, such as earlier lifestyle inflation, greater student debt burdens, or career paths that initially rewarded visibility over pure output. Those who succeeded typically credit three pivotal shifts. First, an uncompromising pivot to revenue generating skills. Second, a ruthless audit of every recurring expense that failed to deliver proportional value. And third, the construction of multiple independent income legs that reduced reliance on any employer, client, or platform. Their portfolios now mirror the male pattern in composition, though the weighting sometimes favors service based businesses, community driven content, or niche e commerce that leverages relational strengths. The end state feels identical: financial independence, temporal autonomy, psychological sovereignty, and the freedom to say no to any demand that does not align with personal priorities. The women who mastered this path report that the hardest part was not the technical execution, but the emotional unlearning of cultural scripts that equated worth with constant productivity, performative busyness, or relational centrality. Once that internal narrative detached, the external actions followed with accelerating momentum. The demographic footprint of this growing class reshapes entire regions. Counties that 20 years earlier faced population decline and economic stagnation now experience steady inflows of high human capital relocators who arrive debt light, savings heavy, and intent on low friction living. Local businesses adapt quickly. Upscale grocery chains open smaller format stores. Fitness studios replace shuttered retail spaces. Co working spaces appear in former warehouses, and real estate agents specialize in properties that emphasize energy efficiency acreage for gardens, quiet streets, and fiber connectivity. Property values rise but remain far below coastal equivalents, allowing newcomers to purchase outright or with minimal leverage. Tax bases strengthen without corresponding increases in municipal spending because the new residents demand little in public services, preferring private solutions or voluntary community efforts. Schools in these areas see enrollment stabilization or modest growth as some sovereign parents choose to raise children locally, supplementing with hybrid homeschooling, online academies, or charter options that prioritize skill mastery over standardized testing. The cultural tone shifts toward pragmatism, competence, and mutual respect, with less emphasis on status competition or ideological signaling. Back in the primary metros, the contraction continues. Office vacancy rates hover at historic highs, converting many towers into mixed use residential or demolishing them entirely for land redevelopment. And say, retail footprints shrink further as consumption patterns favor experiences over possessions. And those experiences increasingly occur outside city centers. Restaurants, bars, and entertainment venues that once thrived on expense account spending or after work socializing now compete for a smaller pool of discretionary dollars spent more selectively. Dual income childless professional couples remain, but their numbers dwindle as marriage and parenthood delay further or disappear from many life scripts. Single female households increase in certain neighborhoods, yet many of those women quietly follow the relocation trend when remote work solidifies or when urban costs finally exceed perceived benefits. The cities retain their role as innovation hubs, deal making centers, and cultural amplifiers, but they no longer serve as default destinations for ambitious young adults. The gravitational center has decentralized, spreading opportunity across a wider geography and reducing the monopoly that a handful of coastal metros once held over talent and capital flows. Corporate leadership selection remains locked in the merit only paradigm, with occasional exceptions proving the rule. Chief executive appointments in 2034 and beyond go almost exclusively to individuals who have already led large divisions through multiple downturns, delivered consistent free cash flow growth, engineered successful turnarounds, or scaled businesses under capital constraints. Gender enters the discussion only when regulators require reporting, not when boards deliberate succession. Women who reach these roles compile resumes indistinguishable from their male counterparts in rigor, depth, and impact, often having spent longer in line positions to offset any perception of shortcut advancement. Their presence reinforces the standard rather than challenging it because the environment allows no margin for underperformance regardless of demographic category. Below the C suite, the pipeline tightens further, with promotions hinging on quantifiable value creation, leading indicators of future contribution, and absence of red flags in pattern recognition reviews. Young professionals of both sexes who understand this dynamic early focus obsessively on building irrefutable track records, mastering high leverage tools, cultivating executive presence through results rather than polish, and maintaining impeccable personal brands built on competence, not charisma. Technological displacement enters its next phase as multimodal large language models, agentic systems, and embodied robotics begin handling more complex physical and cognitive tasks. Warehouse automation reaches near full deployment in large distribution centers. Last mile delivery shifts heavily toward autonomous vehicles and drones. Routine surgery assistance becomes standard. In hospitals, legal discovery, document review, and contract drafting move almost entirely to AI, with human oversight limited to edge cases. Entire categories of middle skill work evaporate, creating downward pressure on wages in remaining fields and accelerating the premium placed on irreplaceable human elements judgment. Under uncertainty, creative synthesis, interpersonal calibration, physical dexterity in unstructured environments, and ethical discernment in ambiguous situations. Sovereign individuals who position themselves upstream of these waves, either by owning the automating technologies providing specialized maintenance repair or integration services, or by exiting paid labor entirely for passive income streams, weather the transition with minimal disruption. Those who remained embedded in vulnerable occupations face prolonged unemployment or forced pivots into lower paying service roles unless they execute rapid reskilling. The sovereign response to this wave emphasizes three pillars: ownership, control, and redundancy. Ownership means holding equity in productive assets, whether businesses, real estate, intellectual property, or yield generating financial instruments. Control means structuring arrangements so that no single counterparty employer, regulator, platform, or partner can unilaterally alter terms or revoke access. Redundancy means building parallel systems so that failure in one domain triggers automatic failover to another. A practical example might involve a remote software consultant who maintains three separate clients across unrelated industries, runs two automated digital products, generates dividend income from a diversified equity portfolio, owns a rental duplex managed by a local property company, and keeps 6 months of living expenses in high yield treasuries, plus precious metals stored off site. If one client terminates the contract, digital products continue running, dividends, accrue, rent checks arrive, and liquid reserves provide breathing room for replacement business development. The structure absorbs shocks that would devastate a single income, single asset household. Social relations within the sovereign class stabilize around low maintenance, high signal connections. Friendships endure through decades, with contact occurring quarterly or less, yet carrying immediate depth when it happens. Romantic partnerships, if chosen, operate under explicit mutual agreements that cover finances, time allocation, conflict resolution mechanisms, and dissolution terms negotiated upfront and revisited annually. Children, when present, receive deliberate upbringing focused on self reliance, critical thinking, physical capability, financial literacy, and pattern recognition rather than credential chasing or conformity training. Many sovereign parents opt for hybrid education models that blend structured academics with real world projects, apprenticeships, and travel, exposing children to diverse environments while shielding them from institutional socialization that prioritizes compliance over competence. As the 2040s dawn, the long term consequences of these individual level decisions aggregate into macro level transformations. Marriage rates stabilize at historic lows. Birth rates remain below replacement, producing aging populations and shrinking workforces. Entitlement systems strain under demographic math. Urban centers contract while decentralized nodes expand. National savings rates climb as consumption gives way to accumulation. and cultural narratives shift decisively toward personal responsibility, pragmatic adaptation, and outcome based status. The girl boss era that once symbolized collective ascent through institutional reform fades into historical memory, replaced by a quieter reality where advancement occurs one verifiable result at a time, and security derives from self engineered buffers rather than external guarantees. Men who walked away first demonstrated that withdrawal, followed by intentional reconstruction, could produce durable flourishing. Women who followed suit proved the model universal when applied with equivalent discipline. Together, they created a blueprint for navigating a world where promises, contract constraints tighten, and only alignment with reality endures. The 1 hour gang, you have reached the end of this deep dive, and that level of commitment deserves respect. If these angry guy breakdowns resonate with you and you want more of this unfiltered clarity, consider showing support by buying me a Red Bull using the link in the description. It keeps the engine running. Drop a comment below. What stood out to you most? Do you agree with the trajectory laid out here, or do you see counter forces that could reverse it? Share your thoughts and let the discussion build. Like the video, if it hit the mark, do not forget to subscribe. And if the message connected, share it with someone who needs to hear it. Just remember that all roads lead to MWA men walking away in cheers.
Nothing says you care like crypto. Nothing can compare. Nothing says you care like crypto. Oh, nothing can compare to crypto.